This is Real Estate This Week with Stephen Gasque, continuing 16 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and I'm so glad you're here as we look at a big deal, how home buyers can overcome the barriers to getting the house they want. Home price barriers, mortgage barriers, down payment barriers, competition barriers, and more. Can you do it? Yes, you can. Let's find out how by asking a real estate expert. Joining us now is Chris Pelkola Lee, broker-owner of Simply Home in Idaho Falls, Idaho. Chris served as the 2023 National President of the Women's Council of Realtors. She's also the past president of the Greater Idaho Falls Association of Realtors. Chris, welcome to Real Estate This Week.
Thank you, Stephen. Happy to be here. Thanks for having me.
You're very welcome, and I'm so glad you're here. So first of all, how's business in the beautiful state of Idaho?
Business is actually moving right along. We're moving toward a more balanced market, which is great. It's better, I think, for everybody. Certainly a little bit easier for those looking to purchase. So business is good. It's been a beautiful spring and summer.
That's wonderful, Chris, and I'm so interested in what you said because in many southern and western markets, many more homes are coming up for sale. And you're reporting that that might be true in your area too?
Yes, we definitely are seeing more inventory. Our inventories were obviously very, very low. We were one of those areas that during and directly post-COVID, everybody wanted to move and come to beautiful Idaho and more rural areas. So we benefited from that at the time, but it made it very challenging. We just didn't have enough rooftops. So our inventories are coming up. We're running more about like 2017 levels currently, which is good. It was kind of 2016 and moving forward in my market, at least, that we really started to see price appreciation. So that's really getting toward a more balanced market there, which is great. Like I said, overall, the sellers would still like to see the more competitive in their advantage, but it's working out pretty well. And certainly different market here than in other parts of the country where we have some people moving from, so they're experiencing something else where they live.
And I love the way you put it, Chris. We didn't have enough rooftops. That's awesome.
No, not at all, because it was rentals and for purchase. We just had too many people living in their parents' basements.
I see. And so, Chris, today let's talk about helping today's home buyers overcome the barriers they face to home ownership, beginning with something we were just mentioning, the number of homes for sale. So tell me, does additional inventory, as they call it in the business, help a buyer, and how?
It does. And the other thing is to look overall. I mean, we can say overall there's more inventory. There are more homes available on the market for purchase. But there are micro markets in every market. So there might be more homes overall, but in a lower price range, like where a first-time buyer might be, that might still be a very competitive market. So there are markets within markets. But in general, the more that's available, that helps. I mean, it's all about supply and demand, right? If you have 5 people that want one house, that house is going to be more expensive than if that one house is searching for a buyer.
And so, Chris, in those markets in which buyers face a shortage of homes for sale, which, as you say, it's changing in your market, but in some areas it still might be the case. Tell me, what is your best winning strategy for overcoming that barrier?
Well, I think in any market, but particularly if there's a shortage, buyers, financial readiness is the number one challenge. And it has been for quite a while for all of the headline reasons we've heard. But having a pre-qualification, a pre-approval if you can get it. But you need to show up ready. You can't find the house you like and then decide to go figure out if you can afford it. You have to do the homework. You need to talk to a lender and to see what kind of down payment do I need? What do I qualify for? Are there debt payments on my credit that I need to pay down so I can better qualify for a better rate? So really understanding your finances and quite honestly, starting to save a little bit every month and maybe even gifts from family, that takes time. So you really need to start a year ago. So if you're listening now and want to buy a house, start saving now, start understanding what your finances are, and speak to a local quality lender that can really guide you through that.
Chris, that is great advice. Getting your finances ready before you start house hunting. Now tell me, once I start house hunting, typically will I find competition for the house I really want to buy?
You will. And the thing is, we're not at least where I am, and in many markets, it's not a balanced market yet. And some markets are still very competitive. And even if it's a balanced market, if a property's priced correctly, then the buyers that are in the marketplace are going to recognize that. If a home's in great condition, the buyers that are in the marketplace that you're competing against are going to recognize that. So if there's at any point in time, there's a set number of homes available in the marketplace in your price range that would be your target if you were as a buyer, that same pool of properties is any other buyer is going to see the same way you are. So if a property comes on the market in your price range and it's in better condition, shows better, everything else ready to go, every other buyer in your price range is going to see that as well. So yes, it'll still be competitive. And we see that.
I see. And in that case, Chris, would I be well advised to come in above list price, or is that not necessary?
I would definitely say that consult with your realtor. They're going to know the ins and outs of your market locally. Some of it is cultural. Some of it is, and as people move around, that changes and has different impacts as well. But there are different expectations in every marketplace. And that may be the case. In my marketplace currently, if something comes on the market and you're making an offer on day 2, that seller is not as likely to be as negotiable as if it was on the market longer. So if you're coming in early, you probably are going to have to make a very competitive offer, even if you're the only one at the table, unless you're willing to risk that property still being available later and potentially being more negotiable. So you kind of also don't want to shoot yourself in the foot, because if you want to wait just to save $2,000, you might lose out on the property entirely. And $2,000 of a purchase price, what that does, your mortgage amortized over 30 years is probably like $5 a month or less.
Right.
Maybe 50 cents.
Very true.
So you don't want to get in your own way in this process either.
And Chris, when you actually write that offer, you said in some cases you may have to come in above list price. Now, what else? If you were crafting what you believe to be a winning offer with your client, what would be in that offer?
Well, I think it's important to understand that when someone's selling their house, it's actually about the seller quite often as much as it is about the buyer. And assuming that the best price is what the seller always wants isn't necessarily correct. I think it's important to have a conversation with the listing agent, and they may not be able to tell you the motivation for sale. They may not be able to tell you everything that will help you craft the best offer, but they might. So in talking with the listing agent, they might say, you know what, they just really need to get out of this. And if they could possibly close in less than 3 weeks, that would be of value to them. Or, hey, they don't want to move this furniture. If you'll handle all that and throw it out when you show up, that would be of value to them. There might be some non-denominational things that can help get your bid to the front of the line because it gets the buyer and seller closer together.
That is such great information. And so, Chris, once again, let's sum it up. What is your best winning strategy if you face competition for a home you really want to buy?
You really need to work with your realtor, work with your professional, because they're going to guide you as to how you can best position yourself in that marketplace. You've got to be financially ready. You have to come as strong as possible, which means you have to start earlier. And you need to understand the mortgage product you have. Shop that loan. There are other products that might be better than what you typically think of or see on the news. The 30-year fix isn't the end all be all for everybody. And there might be a more competitive product that can close faster, a different lender that can close faster, some other thing that you can bring to the table. You don't need to ask for closing costs versus someone that does ask for the seller to contribute toward closing costs. You're negotiating that net offer to the seller. So making those numbers look as good as possible to the seller, taking as much risk out of your offer as possible. If you have a home to sell first, but you don't need to sell it, writing an offer that is not contingent on selling that house is more competitive than saying, hey, I want to buy your house, but I have to sell mine first. You want to get together? That's shifting risk to the seller. So as much risk as you can take on yourself as a buyer and take off of the seller in your offer, that's a more attractive offer to the seller.
Chris, that is some razor sharp strategy. I love it. And a question now. Something you just mentioned involves mortgages, and not just taking the same old 30-year fixed conventional mortgage, but looking for alternatives. So would you advise a client to shop around for a mortgage, the one that fits them best?
Absolutely. And, there are different products there are some products that if you're buying in a certain census tract, you can get a more attractive terms with regional banks because of national programs that they participate in. There are some good neighbor programs if you're a doctor or a firefighter or a teacher where you can get better terms from some lenders or even from HUD with houses and foreclosures they have listed. There are, beyond the 30-year fix, conventional, a 5-1 ARM or a 7-1 ARM.
And just in case someone doesn't know what an ARM is, that means adjustable rate mortgage.
Some people find these to be controversial, but the reality is nobody stays in their home for 30 years. So why do you need to lock in a rate for 30 years? And if a FHA, even an FHA 30-year fix is often less expensive, even paying that mortgage premium, than a conventional 30-year fix. When you look at the monthly payment, because the rates are so much better. The 5-1 ARM, I just had someone that locked in a 5-1 ARM on a purchase, and at under 5%, when she was quoted almost 7% on a 30-year fixed.
Wow.
Which is, it's crazy.
Wow.
So yes, it will adjust in year 6, but in year 6, it's going to adjust up to what she already would have paid on day 1. So in the meantime, she saved 5 years for 5 years on her interest payments. And that makes a great difference in her financial profile overall. So when you're looking at purchasing a home as an investment, and it really is an investment in your future wealth and your current wealth and savings, you need to look at the bigger picture. How is this going to help me overall? And what product will get me there? And if you know that you're not going to live there more than 5 or 7 years, then don't worry about locking in a 30-year rate. It's still amortized over 30 years, so the payment still works that way. And it might adjust up. You may be able to refinance. You may not be able to. You also might move. We just don't know the future.
Chris, this is solid gold. This is great advice for anyone trying to buy a house. Now, another big barrier that you've seen, that I've seen, that anyone who's buying a house has seen is the down payment.
Yes.
There's a myth out there, Chris, that you need 20% down. Obviously, you do not. Tell us about coming up with the down payment and what strategies you advise your clients.
You bet. The myth, and every time the media writes about loans, they talk about a 20% down, and we all just shake our head because With a conventional loan, you need 5% down. And with FHA, you only need 3.5%. And there are even conventional loans with 3% down. That said, there are 100% loans for VA or USDA loans. Keeping in mind, of course, that the less you put down, your higher your payment will be. So it sounds great to put less down, but your monthly payment goes up. So you need to be able to support that payment. The other thing is there might be, if you've got excellent credit, you might qualify for like a good reward second we have here in Idaho, where it's a second mortgage that brings almost the rest of the equity. There are some loans where you only need 5% or $500 in the deal, and there are various ways you can structure it that way. So speaking with a lender and understanding what's available to you, and let me stress too, this is largely based on credit. So understanding your credit early, making sure no one else's credit is reporting on your credit, because that happens too. I had someone with my name in another state, their student loan was reporting on my credit, and I didn't want to deal with it. This was years ago. I was like, until she stopped paying.
Oh.
And then okay, I need to dispute that on my credit and have that removed because it was negatively affecting my credit score. So you need to understand it. Even if you think you're doing everything perfectly, there might be something on there that's incorrect that you need to have corrected, which takes a few months before you qualify for those good rates.
And to sum it up, in coming up with the down payment, what's your best winning strategy for coming up with the money you'll need to buy a house?
Start now. Put aside a little bit of money every month, every paycheck, and do it automatically. So if you have a checking account where you pay all your bills, have some automatically go to a savings account on the side that you never see, so you never think about spending it. Automatic savings is the best way to go. If you are able to ask family for a gift, your mortgage will likely allow you to have gift funds that'll work toward your down payment. So if you have a parent that says, hey, or a grandparent, hey, I want to help you, they can give you a gift that will only go toward that. The lender will need to document it and to verify that they have the funds and it's not a loan, but it's actually a gift. But they're basically having those conversations starting now. Always put something aside. And even if you end up not buying a home, you have a savings account. It's so important to have that savings on the side. So I would say start saving, start saving, start saving. Talk to your family members, see if anyone can help you out. And you might find that that's the best way to go.
Excellent. And Chris, the last barrier, mortgage interest rates. Some realtors believe it's better to buy a house now, and if they come back down, refinance. What's your take and what's your advice?
Well, I have had people since, say 2020, but I've had people come to me and say, I'm just going to wait for the prices to come down, or I'm going to wait for the rates to come down. And neither of that has happened. And in my marketplace, the prices have only appreciated since 2012. So we've had 13 years of prices going up and people still waiting for them to go down, which means they're just still renting. So at some point, you only win if you get in the game. You can't win from the sidelines. You can warm the bench all you like, but you got to get in the game. And there's no predicting the future. Rates will go up, rates will go down, prices will go up, prices will come down. But if anyone could time the market, I'll tell you what, I would be on a beach somewhere and not on a podcast with Stephen as much as I like this. There's no crystal ball. You got to just do it. And if a better rate comes along and you have the ability to refinance, fantastic. Just make sure that whatever you're buying right now, you can afford and you're not purchasing beyond what you can pay for.
And you know, Chris, at the end of every section of this talk, I have asked you what your best winning strategy is. But when it comes to mortgage interest rates, we've pretty much covered that throughout the entire discussion, looking at mortgage alternatives and looking at adjustable rate mortgages and looking at programs that can get you in with a low down payment. We have really covered it all. But let me still ask you, when it comes to mortgage interest rates, what is your best winning strategy for someone who really wants to get a house?
Have a quality, reputable local lender that you can work with and make sure that you qualify for today's rates. I can't stress enough, I guess, understanding financial readiness, that is the biggest obstacle. So yes, mortgage rates are in there, but it really doesn't matter what the mortgage rate is, if it's a quarter point up or down, if you're financially ready, you can handle it.
Excellent. And Chris, let me leave you with your best advice overall by asking a key question. Buying a house is a lot of work. Is it worth it?
Yes, absolutely. Buying a house is the number one way that Americans can move toward wealth. You're just burning the money renting versus actually investing in your future wealth. And one day when you sell that house, now you have the down payment for another property, or now you have the ability to pay for a child to go to college or to take a mortgage out or do something else or a second home. It just opens so many more doors that is really about generational wealth. And it's the most reliable way to get there. Your value will go up and down, but over time, you will win in real estate.
Well, Chris, I really want to thank you for joining us on the show today and telling every potential buyer how to overcome the barriers they'll find. Barriers that can be overcome if you just know what to do. And you've certainly told us that. Chris, I can't thank you enough for joining us on Real Estate This Week.
Thank you, Stephen. It's certainly been an honor and a privilege. So thank you very much. I appreciate the conversation.
Me too. Chris Pelkola Lee, broker-owner of Simply Home in Idaho Falls, Idaho. Chris served as the 2023 National President of the Women's Council of Realtors. She's also the past president of the Greater Idaho Falls Association of Realtors.
You're listening to Real Estate This Week with Stephen Gasque.
And now it's time for Beyond the Basics, in which we bring your real estate knowledge to the next level. And today, we're going to look at a real estate term that many professionals know about, but which you might not know about. And it's called the kickout. Now, this does not mean when the tenant's lease expires, you kick them out. No. Instead, it's part of a contingency that might be included in the offer to buy a house. And here's how it works. Say that you plan to sell your house and buy another one. But before your house sells, or even gets an offer, you find the absolute perfect next home. Your dream home. The one you have always wanted. So, you make an offer on that place, and it's accepted. Congratulations. However, there is a problem. What if your current house doesn't sell? If no one's interested in your house, but that dream home is now headed to the settlement table, you might end up with 2 houses and 2 mortgages. Or, since you won't have the money from selling your first house, your mortgage on the dream house might be denied. Either way, that's big trouble. So, to protect yourself when you find a house you want to buy and you haven't sold yours yet, you can include a sale of home contingency. And if that offer is accepted, it means you've got the house if your house sells. It's great for you, but not so great for the seller. For them, it's risky, because if your house doesn't sell, neither does theirs. And so, to deal with that, the sale of home contingency offers them some protection. It allows the seller to keep their house on the market. People can still look at it. People can still make offers on it. And your contract is kind of off to the side, waiting in the wings. And during that period, if someone else puts an offer on the house you want, that's when the kickout comes in. It's part of the sale of home contingency, and it says that if the seller gets another offer and they want to take it, they tell you either drop the sale of home contingency and buy our house whether or not yours sells, or you're out. Your contract is dead, and you are kicked out. You'll have some time to decide, like maybe 24 hours, and that's when you roll the dice. If you think your house will sell, you might just drop the sale of home contingency and just move forward with your fingers crossed. But if you don't have any offers, it's probably wiser to accept the kick-out and just let somebody else buy that house. Because again, you don't want to be saddled with 2 homes and 2 mortgages. Now in today's market, that scenario is pretty rare because houses usually sell fast and for good money. So most sellers would never accept a sale of home contingency. But as we know, real estate markets change all the time. And so someday, when you're selling your house, you might face a sale of home contingency, or you might want to include one as a buyer. I wanted you to know about them, just in case it ever comes your way, because our main mission here is to make sure you know everything you can about real estate. And by the way, that statement comes with no kick-out included. Next time on Real Estate This Week, how to sell a house. We'll talk to a broker who just sold 7 houses in 1 week, and he'll share his strategies, pricing, condition, marketing, and 3D virtual walkthroughs. That's next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every Thursday, everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.